I mean, it was not like a great Wednesday, so to speak. It was quite a scary Wednesday, and especially in the second half, we did see a massive sell-off. You just cannot sugarcoat that. Now, variety of reasons, variety of the reasons could really be attributed to that. What markets took notice of the fact that the regulator has come out and, in a sense, has issued what could be called as an advisory, saying that you need to protect investor interest in small and mid cap stocks, which is that check on inflows, come up with a framework, and prioritize, and there should be no first mover advantage when it comes to redemptions. So the message from the regulator is that they are not very happy with the kind of bulging up and with the kind of price action which is happening in the small and the mid cap index. And here's the regulator is referring to mutual funds, because flows are coming into mutual fund schemes via the small and the mid cap funds, and that's where money will always chase performance, and that performance is a function of flows. So flows are strong in small and mid cap stocks because the outperformance of late has been recent. So that in a sense spooked the market. Where do we go from here? I continue to maintain the view that this rising tide phenomenon in small and mid cap stocks I think is over. 2023, broadly 80% of small and mid cap stocks they went higher. I guess that number for 2004 could be significantly lower. And you can actually see now, not just yesterday, but in the course of time now, that's the data. Out of the 946 constituents, the decline in terms of outperformance, I think has started coming down if you look at the month of Feb. Similarly, if one looks at PSUs, power, railways, the dominant mid and small cap names, they are also taking a back seat. So you just got to be careful of risk and valuation in the small and the mid cap space. I think the rising tide phenomenon, at least for the moment, looks like has taken a back seat. Volatility, I think, is there. Since leverage positions are not that large, so I don't expect that a spiral impact would happen. But from a market health standpoint, I think next 2 or 3 days are important for this space, because this space, in a sense, has seen margin funding. And typically when the sell-off starts, could it snowball into something bigger? Because today is also FNO expiry, or this could be just like a bull market correction, it will come and go.
But Nikunj, would you attribute the move we saw yesterday largely in part to the kind of SEBI MF advisory that was declared?
Markets are looking for a reason, and just like I said that, when the regulator comes out and points out that, look, there is this red line, markets will take notice of that. What needs to be seen is that will we see follow-up buying at lower levels, or will there be more margin funding compulsions? Now that is anyone's guess. But next 2-3 days, I think in general, I expect that would be volatile for small and mid cap stocks. Whatever pressure on the margin front has to happen, I think it happen in the next 2 or 3 trading sessions. And then once the dust settles down, or once the excesses are out, you actually may see that only 30-40% of the small and mid cap stocks actually will start outperforming. So I think you are in for a big change there. The pattern of 2024 could be dramatically different from pattern of 2023, and you need to be cognizant of that. You want to be buyer in some of these stocks, but I think we are still a distance away where you can say that they're looking attractive, or we are in the fair value zone for small and mid cap stocks. Look, they were due for a fall, and I'm not surprised the fall has happened.
Yeah, and if we're just mapping the expiry move as well that we've seen for the frontline indices over the past few months, after that November-December outperformance, so to speak, where the Nifty rallied about 8%, you had the Nifty Bank gaining about 9%. In the month of January, you had that bout of slight degree of underperformance already kicking in, with the index losing about 2%, and the Nifty Bank, more importantly, seeing a higher degree of underperformance. The returns for the benchmark in the month of Jan was about down nearly 7.5%. So just, Nikunj, tracking the series rollover, etc., given the fact that it is expiry, any noteworthy points here?
Look, the data is not looking bad at all. I mean, probably we look at the large cap stocks or the Nifty. I mean, we've consolidated enough. We had one bad day. Expiry numbers and the rollover data does not look all that bad. You may actually see that since markets are underperforming, the pressure on the rollover could be there. The rollover numbers by the end of the day may not be all that exciting, because when you are in the money, the temptation to rollover is high. When you are not in the money, the temptation to take a hit and get out, I think, would also be high. So I think there would be some So the roll over number, I think from that context would be important. But purely if you look at the large cap stack, and I'm talking about not mega cap, but the large cap stack and the FNO stack, there are not too many excesses there. And global cues are intact. Nifty has consolidated enough. Valuations are not that stretched. Earnings are still looking great. So you cannot make a case that, okay, what happened to the small cap space will also be happening in the large cap space and some of the Nifty 50 stocks. I think we are looking at two very different markets. One market where excesses are getting challenged. B, the large cap space, which gives you a margin of safety where the earning support and the macro support and the flow support is there, and that market in a sense has consolidated. So you may actually see, which I think is visible. Look at the month of Feb, outperformance in large cap stock has started. I think that's here to stay. From an expiry standpoint, you may see some spillover effect of the small cap stocks, the small cap sell off in some of the ranked FNO stocks, but that's about it. I don't think there is anything to really worry about, purely if I look at the texture of the market, the FNO data, and how the technical positions are stacked up.
All right.